Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Ports. Welcome to episode 29. So, on the last episode, we talked about the JPY. So, what is happening with the JPY is that in September, unlike the dollar, we're expecting the JPY to be bearish. So, it gave us a tiny pullback, and we're expecting the JPY to go bearish for this current September. So the US dollar is always questionable. It might buy without a reason. It might fly all the way up there without a specific reason. So, but that's not what I called you here for. My okay, the pound JPY might be the currency that you might as well be looking into in terms of price action because the pound JPY are in economic divergence at the moment. So I'll be talking about the pound JPY soon. We can talk about how to tackle the pound JPY, what to enter the market, what to exit, and those other things. So here we have the biggest trade of the year. Remember, this trade only happens once in the year because of the tourist arrivals in Turkey. Turkey is it's in the Middle East. It's at the door of Europe. It opens the door to the Middle East as well as yeah, it opens the door to the Middle East, the Arab states, including India. So that's uh, the reason why we have this is because right now when we're moving towards December, it is winter in the northern hemisphere, which is Europe, and there's a it becomes cold. A lot of countries get a lot of snow, and in Turkey it is much warmer because they are in the Middle East. Countries like Turkey, Spain. Okay, Spain gets a little bit cold, but that's fine. Italy, those are the places where a lot of wealthy Europeans go to, but they really go to Turkey. Turkey is moved by tourist attractions, and in terms of the overnight charges or the swaps, so for each night that you hold this currency in the bearish direction, which is Euro TRY. At the moment, I'm expecting the euro to collapse uh, based on. I'm expecting it to collapse based on the fear that is created by Russia hitting, throwing a drone in on the land of NATO in Poland, and of as well as the other reason is that Denmark is having a bearish market sentiment, and normally the euro follows the trajectory of the the okay uh what do we call it, the Denmark is the capital of Europe, it's the capital of the whole planet, and the euro follows what is happening in Denmark. So Denmark is seeing a bearish move, and we also had the preliminary economic releases in euro telling us that these guys are actually looking to sell the euro. So with the euro selling and the Turkish lira buying due to uh, the Turkish lira is buying due to macroeconomics, and the in macroeconomics the Turkish lira is buying and the euro is selling. So what we're gonna do is that we're looking forward to holding a bearish move, and it's not that much of a bearish move. The move is, it will stop move it will turn around in November. So what we're expecting is to have these tiny candles, and as we are gradually moving towards this main order block here where we're going to be taking profit. Even if I get this second move higher, that will drop a little bit lower. I won't be taking that part. My intention is to take profit here and escape with all of the swap that I made in that last trade. Now, the advantages of having a huge swap like this, which is 1,184.08 points, the advantage is that each night that I hold the trade, let's say my entry level is here. Okay, there's a high possibility that this market might actually pump higher because we're 5 days away from September. So the markets may not be ready to settle at the moment. So I think I should use another color because it's no longer visible. Let's take pink. Okay, let's say this is my entry level, which I won't enter now. I will be entering in September though, but not now. My intention is not to enter the market now. I know how the Turkish lira is manipulated, and I'm not intending on doing that. You might get a spike out of nowhere, a spike for no reason, something like this. So, so let's say the take profit level is here. Let's turn it into a green line. Let's say the take profit level is here, and the market reverses like inches away from it, and if it decides to do something like this and come back, I'm not going to be doing that. I will be taking profit at this level in November. So those are my intentions. My intentions are not have a big move like this one. My intentions are that I will be having a gradual move, a move that is gradual, not steep, but a little bit sideways, but it will take a little while because of the small candles that we get on the Turkish lira. So this part here, I know we always do these things. Or in this economic projection, this part up here of the market is here, and this part down here is here, and this part up here is here, and we're expecting the market to drop, giving us this part on the Turkish lira and the euro. This trade only happens once a year. It happens once a year. It's a swap that is waiting to be collected. And in terms of macroeconomics, besides the euro saying that it is bullish, we all know that it will follow what is happening in Turkey, what is happening in Denmark, and they have already given us some market projections towards the Turkish lira. They have given us some preliminary economic reports, and because of that, I'm expecting the currency to keep moving lower like that. It's not a long term trade. Okay, it might take a little bit around 3 months. Those who entered the market here, they made enough in swap, but I'm not expecting. I don't want. I don't. I wouldn't allow myself to hold a currency and allow it to come back to my entry level. I don't do those things. When I collect a swap, I take profit. That's just what I do. I collect the swap, I take profit. So September is almost here. We had some kind of a jump in the market because of the opening of the new week, and the market is dropping, but there's a high possibility that we might break above here. You never know what will happen. In fact, we did break because this candle is higher than this one, and we're expecting to get those long-term downtrends. We're looking to create something like this. I believe I've shown you what happened in the previous year. So we're expecting to take profit here instead of here. And when the market turns around, we need to, you know, forget what will happen. As I said, this trade happens once. It only happens once a year towards the closure of uh, the economy in the southern hemisphere. So that's the trade that I'll be looking forward to. So the best trade that we can look forward to trading besides the US dollar is actually the pound JPY. We're going to be talking about what we expect in the pound JPY, how to hold it, where to hold it. We're expecting a tiny pullback. You can see that it's oversold, but macroeconomically, it's telling us that it will continue being bullish. And if it does that, it will actually. I'm not okay. According to my knowledge, I don't believe that a currency can actually move in the same direction for a long time. I expect it to give us a pullback here on the 50 and come back perhaps to an order block that was not tested, which is let me show you this order block here. I'm expecting it to at least come back to this order block and head for the targets that we're looking forward to. We might get something like this, back to this level and moving higher, because somewhere somehow you need to get a pullback. So those are my economic projections. I'll be looking at the pound, but this is actually a huge trade that we're looking forward to. And we should not forget my favorite trade, which is the CAD JPY. I don't know if I was actually looking at that. Okay, the CAD JPY. The reason why we're looking forward to buying the CAD JPY is not because of the CAD, is because the JPY will be will be shedding a lot of strength. It will be losing strength over time. The economy is actually collapsing, probably because we're moving towards the end of a recession, and that's part of the reason why I believe in holding the CAD JPY long term. So that's the reason why I'm expecting that. But here I expect a gradual move downwards. I remember that I told you that the CAD is oversold, and we can expect a pullback from the CAD. That pullback does not have to go all the way up here because the CAD macroeconomically it's moving sideways. So even if we get that tiny pullback, it will give us enough strength for the market to move higher. However, because the JPY is weaker, it will be getting weaker and weaker. That's why I'm not even expecting the market to drop below the 23.6 here. So we might get a tiny pullback in the CAD and sideways move. But as long as we have a bearish JPY, that might give us enough of an economic divergence. And in that economic divergence, we're going to be having a bullish move. Even though these two currencies are not bullish, but because one currency is steadily moving lower and lower, and the other one is moving sideways, giving us a pullback and a sideways move, the general direction for this market will be bullish. But that is an economic projection. It has nothing to do with price action. It's just an economic projection, and this is another trade that we'll be looking forward to. And it's already 1 a.m. now, and I need to sleep, guys. I need to sleep. Goodbye, guys. I'll see you on the next episode.